It's February 16th, and I'm here with Kaitlin Solomon to bring you this week's weekly update. As always, we've got 3 topics for today. We're going to bring you the latest of what we're seeing in the market. We're going to talk about inventory, number of listings we're seeing, because that's a big topic this year. And then lastly, buyers, we have an update for you on a change that's coming with conventional loans. To start, Kaitlin, what are we seeing in the market this week?
Yeah, so we had a new property that was just listed, and within the first hour, they had 12 showings scheduled. So then we have another example of, just like last week, competing offers are back. They had 17 offers when they went to present offers, so it's pretty crazy out there still. That's
strong. So last week we talked about the percentage of all the listings that are on the market that's pending. So that means of everything that's available out there, last week, 55% of them already have accepted offers and we're working through things to get to closing. This week, that's up a little bit. We're up to 58% pending. To give a little perspective on that, at its peak last year, I think it was May, we got to around 72% of the market total pending. So, you know, in perspective for February, it's looking pretty strong right now.
All right, so now let's talk about trend in sale price. So in December, the average sale price was $8,000 under asking. Following that, January, average sale price was $4,000 under asking. The 46 closings that have happened in the last week are only $1,000 under asking.
That's an impressive trend. Now, inventory. Kaitlin, what did we see for new listings?
Well, surprise, it is still very low inventory. However, in the last week, we're only down 28% versus 40% from weeks past. So while we're still really far behind, we're not as far behind as we were before.
That's good news, I guess. Yeah. Not down as far as we were. All right, next, conventional loans funded by Fannie and Freddie. We're going to try and give you an overview on this, but buyers, if you're buying a house this year, check in with your lender and figure out how this might impact you. In general, from my understanding of this, what we're seeing is pricing on loans, meaning the balance of the interest rate you get versus the amount of money you might have to bring for your closing costs, is getting much better in a few segments and getting worse in other segments. So for example, if you've got a good credit score, but not a lot of down payment, I think this is good news for you. Yep. If you've got maybe a little bit lower than average credit score and any type of down payment, I think this might be good news for you. The unfortunate part of what we're hearing is if you have a middle of the road credit score and a middle of the road down payment, your loan pricing might be getting worse than it is right now. So bottom line, as I started with, ask your lender about this. If you're buying a house this year, you might need to know how this impacts you. Some lenders are rolling out this pricing sooner than later, but I believe everything goes into effect on May 1st. That's our vibe on the market for this week. Thanks for tuning in.
Thank you.